So let's take a market review here, and I'm going to show you some good seasonal patterns that are currently, reflecting where the markets are, just on a seasonal continuation basis. So the first one is the S&P 500. This is the E-mini. These are what we call continuation cycle patterns. And so if you look at this data, you can see this, it'll go 25 years, 15, and 5. All right, so this kind of magenta is a 25-year series. So you can see that the current market where we are in the S&P, the cycle high based on the seasonality pattern is around the 17th of September, which is right now, right? So you can see here the last 5 years, kind of on a 5-year seasonal pattern, the market has been down to slightly down to kind of sideways. And you look back 15 years, it's been, more movement to the downside, and as it heads right into October. So you can see the October period here. And for the, 25 years, you can see it's really at a pretty good pullback here going into the first part of October. Now the big, seasonal, one of the second strong, I think, seasonal times of the year actually is towards the end of October. So you can see we'll get a cycle low around the end of October for the S&P, but actually NASDAQ is sooner. So right now, the markets are, trending down, sideways to down. So be aware of that, and that's how that kind of seasonal statistics can help you, with that regard right now. Now the next one is the NASDAQ 100 seasonality. So it's similar, but a little bit different here. If we look at where it currently is, it also tends to reach a cycle high around the 20th of September. So right about here is where we are right now. And then it pulls back into the first part of October. So you get a kind of a cycle low on that seasonal trend about the first part of October. So you can see here, and then it's a potential for really strong possible seasonal trend up. So, no matter how hard and horrible the markets look right now, a lot of times you just get back into that October period and you see a totally shift of these seasonal trends. That demand picks up, people start buying, different things affect the market, demand side of things. So you get that kind of run into towards the end of the year, the last quarter kind of thing. So those are seasonal statistics that kind of verify that. Now let's take a look at crude oil. So here's the March crude oil continuation pattern chart. And so you can see it reaches kind of a cycle high as well around the 17th of September. So right about here. And then that's the 30 years, pulls back towards the end of October, 15 years, 5 years. So you see the general cycle trend is down into, October. Now, once we get in October, then there's a kind of a cycle trend back up. You can see that back up, and it tends to have a cycle low there about the October, right here, about the 2nd. And the big one, though, is right here. So this is kind of the Santa Claus rally on oil. A lot of times it'll come right at the end of December. And a big part of this sell-off, the reason it is on energy is because in the U.S., inventories are taxed based on the inventory levels at the end of the year. So that's a fundamental factor that a lot of the big oil companies will sell off inventory, to reduce that inventory towards the end of the year so they don't have to pay taxes on it. So a lot of times that selling is based on that kind of phenomenon. And then once that's done, towards the end of the year after that period is done, then you get that, nice blip up towards into Christmas. So those are, a seasonal pattern on crude oil. Now the other one, there's so many different ones, but I just picked a few that everybody probably here trades. Now the next one is the seasonal pattern for gold. So this is a February gold contract seasonality trend pattern. And so it tends to get a cycle high right here about the 3rd of September, and then look at really big pullback again all the way into October, and basically just trends lower until you get again into the end of December, January. Then a lot of the gold starts being bought up because of the Chinese New Year's, India, they start buying more gold a lot of times for, kind of the holiday period. So you get that big gold surge right here, end of December. So if you can, look forward and have these trends, know they're coming up, then you can sit in the weeds and just wait for them until they happen. Now, the next thing though we want to do is confirm the cycle trend, because sometimes maybe, it looks like it's going down, but you might have it counter trend back up because of something. So we're going to use our trading model to kind of give us confirmation and be in alignment with the trend in order to either take it or not take it, or maybe get a better entry, get in earlier, get in a little bit later, where we get a better entry timing on a trade. So that's the other big part of the kind of the process.